Thursday, October 21st, 2021, Monaco 64, home of alternative economics and contrarian views. So, yesterday, in my opinion, will be seen as a significant day in the fight or lack of fight against the inflationary wreck we will witness in the next few years. The head of the German central bank, also known as the Bundesbank, resigned yesterday. And why is that significant? His name, of course, is Jens Weidmann. Well, it's significant because the Germans have been through more than one currency collapse in the last 100 years. It wasn't just in Weimar, during the Weimar Republic, that is, from 22 to 23, when the Reichsmark collapsed, that the Germans experienced the complete collapse of their currencies. It was also in the post-World War II era. There are stories of Germans having to use cigarettes as currency after World War II. So the Bundesbank was founded in 1957, but the Deutsche Mark came a little earlier in 1948, and the military occupation, especially under the Americans, they wanted to make sure that the Germans had a sound currency, and they actually banned deficits, or they made it very difficult for the German government to overspend. And the Bundesbank was created in much the same spirit of sound finances, sound money, and gold especially. I actually think Herr Weidman, or Mr. Weidman, was a gold bug, or is a gold bug. I mean, I can't guarantee you, but a few years ago, I bought this book here, and it's a book that was published by the Bundesbank called Germany's Gold. It's a beautiful book about gold. It's got beautiful pictures about the gold bars that the German Bundesbank holds in its vaults. It talks pictures like this. It talks all about the history of the Bundesbank, the history of the Bretton Woods system. It talks about the London gold pool. It's a great book. Pictures like that, of course. And you can get this on Amazon. The price is gone down since I bought it. I think I paid £30 for it. Now you can get it for less than £20. And this book was written because a few years ago, there's a lot of debate, and I think a lot of German people were asking the Bundesbank about its gold reserves, that it was in New York at the New York Fed. And it led actually to the Germans bringing that gold back. And if you remember well, it took a few years to get their gold from the New York Fed. I wonder why. Could have been because they had to short cover all the hypothecated leases that they did on the back of Germany's gold in order to control the price. Who knows? But the foreword of this book is by Jens Weidmann, president of the Deutsche Bundesbank. So that's the official name of the German central bank. And I'll read his foreword. And you decide whether you think he's a gold bug or a sound money guy, and why it's so significant that he's jumped ship, because not only is he the chief of the Bundesbank, but he's also a member of the ECB. And I think he's sick and tired, really, of negative rates, of QE. And yesterday, it's interesting that German PPI came out at almost 15%, which is the highest level since the 70s. And I think that was the last straw that made him decide to resign. Of course, I can't tell you exactly what's in his mind, but he still had, I think, 6 years left. I think 2 years ago, he was given another 8-year term. So he's left way early. He said, of course, in his comments that 10 years is enough But anyway, let's go through this forward. It's not long. Here it is. I'll show it to you. There's Jens Weidmann. He says, ask anyone in Germany what they associate with gold, and more often than not, they will say that it is synonymous with enduring value and economic prosperity. Many will also reply that the country's gold reserves are as much a symbol of Germany's post-Second World War economic miracle as the Deutsche Mark or the Volkswagen Beetle. Ask us at the Bundesbank what our gold holdings mean to us, and we will tell you that, first and foremost, they make up a very large share of Germany's reserve assets. Germany does, after all, boast the second largest gold holdings in the world. They are a major anchor underpinning confidence in the intrinsic value of the Bundesbank's balance sheet. The Bundesbank produced this publication to give a detailed account, the first of its kind, of how gold has grown in importance over the course of history. Grown. Notice that he says grown. He doesn't think gold is finished. First as a medium of payment and later as a bedrock of stability for the international monetary system, and also to explain just how Germany came to accumulate such large amounts of gold within the space of a little more than 20 years. Also, since many people cannot really imagine how gold reserves are managed and stored, we wanted to share some practical insights into this topic too. Central banks committed to a mandate of keeping the currency stable, like the Bundesbank, need to be sure that the general public have confidence in their monetary policy. I very much hope that this publication will go some way towards cementing their trust in us. So there you go. That's Jens Weidmann. He resigned yesterday. Could you imagine Ben Bernanke forwarding a book like that about the United States gold reserves, putting pictures of it at Fort Knox, telling you exactly how many tons they have? No, I couldn't. I couldn't imagine Jay Powell doing that either. Could you imagine Christine Lagarde doing that? No, I couldn't either. So just before I look at the markets this morning, this is one of the reasons why I think also he resigned. A few days ago, I was reading this article on October 17th, and yesterday, of course, he resigned October 20th. It says, ECB considers boosting purchases of EU recovery fund debt. So the EU doesn't have a treasury, really. For the euro, the countries and the ECB, the countries that issued that are the individual members of the EU that are that have the euro as a currency. But since the start of the crisis last year, they've been issuing EU bonds, and I think that's a very bad thing. It's only going to get worse. And why do I say that? Well, it's another layer of debt from an institution that doesn't even really have any popular underpinning. It's not a democratically elected institution. It's all the commissioners, the presidents of the EU, they're all appointed by national governments. There is no parliamentary election for the MEPs. It's like a Soviet. So this is very serious. And they're talking about, in this article, how the EU wants to increase the issuance of these bonds because the QE that they're doing now, they're running out of bonds, especially German bonds and some other bonds because of the rules. So they want to bring this in to circumvent these rules, and they've already issued about 1.85 trillion of this PEP, this COVID crisis bonds, and they're looking to do more. And I think this is probably one of the reasons why he resigned. The other thing about the Bundesbank, before we go and look at the markets, is that I remember when I started out in the business in the late 80s, the Bundesbank was seen as a very credible central bank. And I know I go on about central banks, and I would still hope that central banks went the way of the dodo bird. But if there is one central bank that has tried to maintain a sound money stance, it has been the Bundesbank. And I remember in the early 90s, Germany didn't keep CPI data and call it inflation. The CPI data that Germans have now used to be called the cost of living data. So yeah, instead of CPI, they call it cost of living. They changed it later on. I guess they've been pressured and pressured more and more by the Keynesians to adopt an inflationary policy. And by calling it CPI and joining the bandwagon and calling it inflation, I think that was a mistake. But I remember really well that the Bundesbank was the only central bank in the early 90s, mid-90s, that still targeted money supply. They targeted M3. Along with the US non-farm payroll, the M3 data from Germany, from the Bundesbank, and this is before the Euro and the ECB, that was the most important statistic out of Europe, the most important one. It was second only to non-farm payroll, to the US jobs data. And I remember really well when we had a bond, almost a mini collapse of the bond market in 1994. German M3 jumped to like 30% one day. And that was, I still remember that day. It was the busiest day I ever had as a futures and options broker. And the German 10-year Bund future contract dropped like 2 points. I remember really well, a few days before that, it was trading around 95, and we dropped to almost 91 on that day because investors expected the Bundesbank to come out and raise rates because of that M3 number. But now all this is, of course, history. And I see here there's an article from Reuters. It says, analysis, exit of Weidman, decade of change shows hawk as endangered species. So there you go. And this is how the ECB reported it yesterday when he resigned. End of an era as Bundesbank chief Jens Weidmann steps down. Head of Germany's central bank was a vocal and often lonely critic of the ECB's ultra-loose monetary policy. So I think he was, unfortunately, he was the captain of the German ship. But unfortunately, you have Christine Lagarde, a convicted criminal, really, who was head of the IMF, a convicted criminal in a French court. And of course, they rescinded, or she didn't have to serve the 1-year sentence. And then she became the head of the ECB ship. And I think he's a lonely voice, and he's jumping off the ship onto the Bundesbank. Well, not really the Bundesbank lifeboat, but his own lifeboat. And I don't think he wants to be remembered as Rudolf Havenstein. And who's Rudolf Havenstein? Well, he was the head of the Reichsbank back in 1923 when you had the Weimar hyperinflation. So there you go. I think, yes, yesterday will be highly significant when people look back, when we see inflation maybe evolve into hyperinflation and the collapse of all the currencies. They're going to look back and say, oh, when Jens Weidmann, he jumped off this inflationary ship at the right time. So with that, let's quickly look at where the markets are this morning. It's 8:15 a.m. London time. Yes, gold and silver are continuing to do really well. Silver outperformed yesterday, and this morning things have been a little different. Silver has continued to go higher. It went up to 24.50 overnight. That's the high. But right now, of course, I think the London bullion banks are coming in and trying to keep it down. We're down 11 cents at 24.15. We're right near the low of 24.08. Gold has made a new high for the week overnight. We went up to 17.90. Right now, we're down to 17.82. It's unchanged. The Dow futures down 112 points, or 1/3%. The NASDAQ is down 1/3 as well. S&P down 1/3 as well. So stock market's having a little bit of difficulty. I saw that Evergrande, they tried to issue new shares, and that failed. I think they had to halt trading. Yes, it's a problem, but I think there's a lot bigger problems for us here in the West, in Europe, and in the US. Evergrande is just one part of the whole puzzle, the whole system. It's not just China that's up to here with leverage, it's the whole world. Currencies, we got sterling down 0.2% at 137.94. We got the euro down 0.1 at 116.38. We got the dollar down 0.25% versus the yen at 113.99. And the dollar's unchanged versus the yuan at 639.78. Aussie dollar is down 0.5% at 74.82. And the US dollar is up 0.2 versus the Canadian at 123.40. The New Zealand dollar is down 1/3 at 71.75. So let's have a look at the commodities. WTI crude is down 0.5% at 82.89. High-grade copper is down 2.2% at 460. Natural gas is down 0.2% at 535. So it looks like risk assets, so to speak, the stock market and commodities are having a little bit of a breather this morning here in London or in Europe. Just to finish off, a quick look at the 10-year yield. It's at 165. It's up 1.5 basis points. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.